And thank you so much for joining us. I'm Marlin Bohling with you as we take a look at our ag commodity trade opening up the week. Well, let's go ahead and see how the grain markets are doing here on a Monday, and we'll take a first look here. Grain markets had a definite, quiet tone on the overnight trade in the Globex market. Looks like, overnight we were only about fractionally up or down either way in the corn and soybean trade. However, just in the last few minutes, we've seen a little bit of a firmer tone developing in this corn market now. Excuse me. Now you have your corn market on December quoted at 346.5. So that is now up 2 cents on the day. We have that March contract now 2 higher at 360.5 per bushel. So that is on the high of the opening range here so far today. May now firming up. It's now 2 higher at 369.25. Let's take a look at the soybean trade here today. And on the soybean market, we have November down 1/4 cent at 978.5. January down 1/4 at 989, and we have that July contract down 3/4 at 1016. Let's go ahead and take a look at our wheat market to see how things are opening up here so far today. And on the wheat trade, we have December now 2 3/4 higher at 428 3/4. We have the March 2 1/2 higher at 447, and July new crop is now 1 3/4 higher at 474 1/4. And let's look at the Kansas City wheat market here. Is it firming up too? Well, it is. How about that? December now 3 1/2 higher at 426 1/4. New crop July 3 1/4 higher at 476. Minneapolis spring wheat trade, we currently have December 3 1/4 higher at 614 1/2, and July up 1.5 at 635 1/2. And in the cotton market today, we currently have that December contract still roaring ahead, up 191 points at 68.79 per pound. With that, I want to bring in our very special guest, Chris Swift of Swift Trading Incorporated in Nashville, Tennessee. And Chris, thanks for joining us here as we take a look at what's going on in the markets here. A big move in the cotton market. Have you heard what that's about here today?
No, I have not. Just have strolled down the street here when about the time it was opening, so I haven't got a chance to look at it just this morning.
We're both a little bit in the dark on that one, and we don't know if that's related to weather or what happened there. But anyway, we'll do some checking on that for everybody. Dollar value of the stock market's new highs again today on the stocks. And we were talking earlier in the show about the fact that the stock market may actually draw a little money away from the commodities, at least temporarily. How do you feel about that?
It can. Those two different assets, most people from an investment standpoint don't really trade the commodities due to the leverage involved with it. But clearly we can see that the equities market's at all-time highs and a lot of commodity markets at multi-year lows. When you think about where I want to put money, buy low and sell high, that kind of equates to those two markets.
So the corn market had been very, very flat overnight, and just basically since you came in a little bit ago, the market firmed up a little bit. We're up a couple of pennies right now, and everything in the entire grain complex in general kind of getting a firmer tone. Would that surprise you today or not?
Not really. Most of the time when they hit the lows, the grain markets are right at the current contract lows for both the wheat and the corn market. So both of them at contract lows, it's just very difficult to push them much lower. There's just not many sellers willing to say, I want to take this price for it. So you start to see the selling evaporate a little bit, and then the buying comes in and lifts it up off the lows.
All right, so we are going to take a quick little break, and when we come back, I want to find out what's going on in this livestock trade. We had some big USDA numbers that came out last Friday after the markets closed up. I want to get Chris's thoughts on what that might do to the cattle complex here today. We had a surprising move right out of the gate, and we'll see how they're doing when we come back. Good to have you back with us on a Monday as we open up our trading for the week, and we've already had just a little bit of a bounce taking place in the grain markets, and now we're going to focus on the livestock trade. And here to talk with us we have Chris Swift of Swift Trading Incorporated in Nashville, and this is right in your wheelhouse here, Chris. You like to track the cattle markets, and we had the big cattle on feed numbers that came out Friday afternoon after the markets closed.
Correct.
What did you think of that placements number at 113%?
Well, it's really interesting that private forecasters continue to miss what USDA comes out with. It's not surprising due to the droughts that we've had in Montana and South Dakota that more animals are moving earlier down into the feed yards. What it makes, though, is we've had all of this year above normal placement figures, and in some cases, we've had them in the double digits. So the continual heavy pull on the inventory going into the feed yards will eventually make for a marketing hole somewhere probably starting in November, December.
Okay, that was my next question, because we just keep stacking up these higher placements and expected month after month after month based on what happened a year ago. But we're getting to the point where we're about a year after that now, and we just wondered how long we can keep that up. So.
Yeah, not for very much longer.
Okay, all right, so I wanted to get your thought on it. All right, let's go ahead and take a look here at what's going on with our prices right now in Chicago. And let's go ahead and take a look at our live cattle board first. Interesting to note, we have December now at 115.78. It's down 82 cents. Yes, it is lower, but if you look at roughly where it opened more around that 115 even level. So we are within 20 cents of our high of the day now and off of our low by nearly 80 cents. February down $1.13 now at 120.15 on the day, so we're just 15 cents away from where we had our high earlier today. A little bit of a bounce there. Now, of course, the most pressure due to the placements number would have been on the feeder cattle side, and we did have some big losses there. But we have November feeders down 220 now. They're quoted at 150.88. So, Chris, similar deal here where we're now 88 cents off of our earlier low of the day. January down 242. Yes, sharp losses, but well off its earlier low. It has bounced about 70 cents or so. What do you think is going to happen here in this cattle complex as we go through the course of the day here, Chris?
Probably not much of anything. Traders were pretty much already positioned before the report came out. I have a feeling what you'll be looking for is bottom pickers out there, because the situation having this great of a pull should make for lesser inventory down the road. So I think you'll probably see some bottom pickers come in there and try to find the lows for the day and maybe buy into it. But this could last several weeks. I'm not going to be in any kind of great big hurry to want to be long again just yet. But over the next 2 weeks, as we sort through this inventory, we should start to draw it down some and get closer to what the November on feed report and see what we placed in October.
Now, the lean hog trade opened up and it cleared the $65 mark. We can take a look at the prices right now on the lean hog board.
Okay.
But as we take a look here at the December contract, 33 higher at 65.18. So now it hit 65.32 for a high, sold off. It went down below 65 bucks, but now we're back up above it again for the second time today. February 32 higher at 69.42, and that is now on the high of the day, Chris. What does that tell you about the strength of this market here?
Still demand. It's all demand, and specifically Asian demand. They continue to want more and more pork from the U.S., and that continues to lift our prices, even though we are in all-time historical highs for pork production. So it's just sheer demand.
But now last week, the export sales were kind of soft.
They were soft a little bit, but they are anticipated to continue at the same rate for months to come.
All right. So as you look at the chart, of course, everybody talked about that $65 level as being overhead resistance. Do you think it's maybe going to close above it today?
It could close above it, but still, until you get above 70, 70 would be the big number to get a new handle on the market. But until it gets above there, I think under 70 is probably still good for another couple of months.
All right. Well, thanks for coming in. Appreciate it.
Absolutely. Thank you.
Chris Swift. He is with Swift Trading Incorporated. He is based in Nashville, Tennessee. And Christina, with that, I will turn it back to you.